Stop. Don't touch that dial. We have got the Intel earnings and I'm going to bring you more information than you can swing a cat at. Does that make sense? Probably not. Let's get straight into it.
Dial.
I've got audio
we have
coming
got
through again.
I had this happen this morning. Never mind.
So here we go. Before.
Stop.
Don't touch that dial.
We have got the Intel earnings. I'm going to bring you information you can swing a cat at.
Does that make sense?
Stop.
Probably not.
Don't touch that dial. We have got the Never mind.
So here we go.
Stop. Don't touch that dial. We have got the Intel earnings. I'm going to bring you information you can swing a cat at. Does that make sense? Never mind. So here we go.
Start again? Shall we start again? Was that the most ridiculous moment on telly? There. I think we'll try that again. I know it's live, but then, you know, let's do it again. If you don't get it right the first time, try again, because that was pretty ridiculous. Shall we? Okay. Let's try it again in 3, 2, 1. Here we go. Don't stop. Don't. It's all gone wrong. Should we try it a third time? Bloody hell, I rehearsed this all day. You've no idea how much effort goes into these shows. It's ridiculous. All right, third time lucky. Here we go. Stop. Don't touch that dial. Before the Intel drops their earnings tonight, we're going to break it all down for you. Get ready for an explosion. Get ready for information that you've never heard before to prepare you for the Intel earnings. This was the third time of trying. I think we're up and running now. I think we're going to be good. So before the algos react, before Twitter explodes, before the talking heads tell you what to think, you know what it goes like. I need 2 minutes of your time. Well, a bit more than that. It's about 3 hours actually, because we got the earnings call. We've got all the build up. There's a lot to do. Anyway, so a bit more than that, because most people watching Intel's earnings tonight are going to miss the entire point. They're going to look at the revenue number. They're going to look at the earnings per share. They're going to see whether it beats or misses by a penny. And they're going to make a decision worth thousands of dollars based on about 30 seconds of thinking. Well, hopefully I can help you with that and make you take your time a little bit. And that is exactly how you get wrecked in a trade like this. Here's the truth nobody's saying out loud. Intel is not a normal earnings story. It is one of the most complex, highest stakes corporate reinventions in the history of American industry. And if you don't understand the backstory, the real backstory, the number you see tonight means almost nothing. Elon Musk mentioned it last night, and we had a little pump last night. Do you remember? So here's what we're going to do. Whether you bloody like it or don't, that is what's going to happen. So buckle up, get ready. This is what's going to happen. What we're going to do right now, before the bell, before the earnings, before the whole damn thing, I'm going to walk you through, you guessed it, 10 amazing facts about Intel that Wall Street analysts know, but most retail investors have never connected together. That's right. Each one builds on the last. And by fact 10, I promise you, you will see the stock in a completely different light. and then we go live for the earnings together in real time. So don't move, sit back and relax. The most important fact is the last one. And if you miss it, you're flying blind tonight. Let's go. Are you ready? Okay, let's get straight into it. It's going to be a fun night, isn't it? Right, let's get straight into it. Here we go. So, welcome everybody. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's great to have you all here. If you're new here, you know what happens. You got to tap the like button. Have you all tapped the like button? You know what? I didn't even do the build up, did I? I didn't even do the build up tonight. I just went straight in. I forgot about that. I have a build up and everything. I forgot about it. Never mind. Tap the like button and consider subscribing. The earnings call starts in an hour and a half. I could go to a build up. Should I go to a build up? No, I'll leave it as it is. Just leave it as it is now. I'll have to put some extra work in this now. So we do the homework for you. We understand the business, and then when we trade it with conviction. That's what we do. You've seen my Coca-Cola, right? How much money have I made today? Beating the market again. I've actually got money on the way to the UK as we speak, trying to buy another $70,000 of my money, hard-earned money, to buy Coca-Cola, and I'm still bloody waiting. Can you believe it? Anyway, so we're talking about Intel Corporation, ticker symbol INTC. Earnings drop in just about an hour. Well, we'll get the numbers in about 20 minutes, and then the call is in an hour and 20 minutes. The call is where you get the atmosphere and the build-up and the sort of feel of where the business is going. That's more important than just the numbers. So let's make sure you're ready. Are you ready? 10 facts. Let's build the case. Fact number one. Here we go. Fact number one. Intel didn't just participate in the technology revolution, it started it. Remember how all this began? Remember? Let's go back now to 1968. We're back. Year before I was born. The world was preparing for me. Two men. Did you know these guys? Gordon Moore and Robert Noyce. Nothing to do with bloody Bill Gates at this point, all right? Leave Fairchild Semiconductor and started a company in Mountain View, California. Now, Mountain View, you might have seen actually on Apple. They've used it as one of the screens out of the backdrops, whatever they call it. I think they even had an operating system. Anyway, they call it Intel, short for Integrated Electronics. Did you know that? You probably did, to be fair. It's not much of a fact, that one. Integrated Electronics. 4 years later, in 1971, Intel releases the 4004, the world's first commercially available microprocessors, or a single chip that could do what previously required an entire room of electronics. Think about what that actually means. I mean, we've moved on in life now. We're kind of getting used to it. But you try and put a flipping whole room of computers on the end of a pin. You try and do it. I mean, where'd you start? I've tried. I've got my little magnifying glass out and a pair of tweezers. I'm rubbish at it. Anyway, think about what that really means, folks. They didn't enter a market. They created a market. And here's what I want you to look into from the start. Intel's dominance was never accidental. It was engineered culturally, technologically, and strategically. For 30 years, this company played chess while everyone else played checkers. Now, why does this matter? Well, tonight, because when you're watching the earnings call and you hear words like transformation and repositioning, and you need to remember who you're dealing with. This is not some startup trying to find its footing. This is the company that invented the footing. I like this. It's good, isn't it? The question is whether that legacy is an asset or a weight. And this can be an issue. You heard Elon Musk mention it last night on the call. It was a very interesting event. All of a sudden, when Elon started talking about it, the stock rallied and then it kind of faded away again. But anyway, there we go. So we'll come back to that about the legacy shortly. Keep that in mind. It's one of my amazing facts. You're going to like it. It's good. So fact number 2, this requires everyone to tap the like button, and I'm going to come to the chat now and see who's here. All right, tap the like button. You done that? Have you considered subscribing? Who are we going to get to subscribe tonight? Who's going to join us on our road to 1 million? Let me go to the comments and let's bring everybody in. So who have we got? Who was here first? We've got the Big O, who just became gold, by the way. Now, the Big O, send me a message on Discord. We can book your 1 hour call. As a gold member, you book 1 hour call a month with me, and I look forward to it. I enjoy them a lot. I've got one tomorrow, actually, from Paul. Paul tomorrow, one of our members, is joining me for a special event tomorrow. Good afternoon, everyone. Stephen Lewandowski, our oil baron. Shogun, that's undecided for now. What's undecided for now? What's undecided? What's going on? The Big O just upgraded his membership. Thank you again. Good afternoon, Stephen Lewandowski. Only a person without eyes will buy. It's a 200 sell. Very overbought, said Usain. It's that Chist? Hope I pronounced that correctly. We got No This Way Gaming. How you doing, mate? Yeah, everyone's laughing. I know. The beginning of this event was a bit weird. I'll give you that. It was a bit mental, but we kind of got there in the end. So much Martyn. It was everywhere, wasn't it? Yeah. Interesting piece of in experimental music. I'm at work dying right now. I'm glad you all enjoyed it. I was like, how do I control this? I ain't got a bloody clue. People are going, what? Starlight is here. How you doing, Starlight? Let me see you here. Nothing good with it. Nothing good with a good laugh. Nothing good? You mean nothing bad? I don't know. Don't stop believing. I nearly did. I was thinking I don't have to fix this. I'm not more receiving messages on trading. I am not more, I haven't got a clue what that means. I am not more receiving messages on trading. TB Smoke, what do you mean? If you're an Electrum member, you'll get it in the community tab. If you're a Discord member, you get it in the trades tab. If I don't trade, I don't buy anything or sell anything, there is nothing to tell you. Because I don't buy and sell just for the sake of it. I buy when we're winning. I sell when we're winning. Good contract with Tesla, says Zaxite. Shogun is here as well. So let's move on now, folks, to fact number 2. Let's get ready. Fact number 2. Intel Inside. It's a marketing revolution. Fact 2. You ready? Tap the like button, everybody, and consider subscribing, everybody. Okay, you ready? Okay, here we go. Fact number 2. Oh, let me get rid of the subscribe button. There you go. What? I broke it again. Sometimes this happens. There you go. Right, fact number 2. And this one I love. I like this one. It's one of my favorites. Here it comes. Fact number 2, because it shows you how Intel thinks. It's 1991. Picture the scene, folks. Picture the scene. Personal computers are starting to go mainstream. But nobody knows a processor. Nobody knows what is a processor. Can you believe that? Nobody knows what a processor is. What's it do? Nobody cares. The poor little processor. The poor little processor. No one cared and no one even knew what it was. You bought a computer, and if you bought a computer, it was a Dell or a Compaq or an IBM. Do you remember that? I had all of those. I had literally all of those. I had one of the first Compaq's computers. Bloody rubbish today. Couldn't even use it. Anyway, the chip inside... invisible. Intel's marketing team had an idea. What if the chip wasn't invisible? They created the Intel Inside campaign. Remember all that? The little sticker, the little holographic sticker. A cooperative of advertising program where PC manufacturers would slap a little sticker on the machine and run Intel's jingle in the commercials. In exchange, Intel subsidized their advertising costs. You remember all that? Remember the little sticker? Remember the little holographic thing? Intel Inside. Think about how brilliant that is. Intel essentially paid other companies to make Intel famous. It's clever, really. Anyway, give me an idea. Within a few years, consumers were walking into Best Buy, I remember this, in England, we've got PC World, and asking, does it have Intel inside? Mental, right? You went, I don't want an AMD. That's like, it's got to be Intel. I remember buying computers like that. It had to have an Intel i4, i5, i6. We didn't have a clue what it bloody meant, did we? But if it was Intel i something, if the number was bigger than the last one, we'd buy it. But if it was AMD, Athlon, it was a kind of like, you know, it was kind of, or a Celeron. Intel Celeron. Remember that? That was like the baby of the Intel. You didn't want a Celeron, you wanted an Intel. You remember all that? I remember it. They used to ask it, does it have an Intel inside? As if the chip brand mattered more than the computer. It didn't at all, but everyone thought it did. Because Intel made it matter, the result. Intel could charge a premium for its chips, not just because they were technically superior, but because they had built a consumer brand in B2B industry. I remember. Almost nobody does that. Nobody. Even Mac. No one did it. No one did it. No one did it. No one did it. Intel did it flawlessly. Now, here's the question you should be asking tonight in the earnings call. Are you excited? In a world where AI chips are the new battleground, does Intel have that kind of brand power anymore? Does it? I don't know. We'll find out in a minute. Can they do it again? We'll come back to that too. Stay with me. Are you ready? For fact number 3, we're going to go to the chat. We're going to go to the chat. Here we go. In the chat. Who we got now? Time for a break. Bought some SCHW Hover Joby. Oh, hello. Stephen Lewandowski's getting all stacked up on EvTolls. We've got the EvToll expert in the chat. Here he is. Vaz the man. Intel inside the sticker. Remember it? Yes. Congratulations. Be ready for 10, 15% lower levels, said Vaz. Any more comments? Any more questions? I'll answer everyone's questions. I'll bring everybody on the show. Everyone gets a voice here. Everyone gets a voice. Fact number 3. Let's do it. Fact number 3. At its peak, Intel owned 90% of the CPU market. If you like this fact, tap the like button. Come on, I'm working hard here. There's 20 likes. What the bloody hell's going on here? 100,000 subscribers, 112,000. 20 likes. Does no one give a damn anymore about YouTube? It's getting very quiet here on YouTube. Everyone's seeing a downturn. It's because of ChatGPT. But we shall not be moved. We shall not be moved. We shall not be moved. Wait, we're not going anywhere. I know. Do you know what I do when it gets like this? I work harder. Today I spent $400 and bought Pro Grok, Super Grok, whatever it's called. $400. I'm working harder. I'm doing more live streams. I'm doing more stuff, more research, working harder. Less people watching means eventually all the rubbish channels give up. Then where do they go? They got to come here, ain't they? They got to come here because no one does it better. No one does it better. So here we go. Fact number 3. And I want you to sit with this number. Sit down. Take it easy. I want to know in the chat now where you're watching this. Are you watching it on the toilet, in the bed, in the bedroom? Where are you watching this show right now? I want to know where you're watching it. Okay? Write in the chat where you're watching it. I'll read it out and share it on the screen. So don't be too rude. Intel's peak market dominance. We're talking late 90s now into the 2000s. Intel held over 90% of the global CPU market. Think about that for a minute. 90% of the global CPU market for personal computers. 90%. To put that into context, Google has about 90% of the search market, and we call Google a monopoly. Intel was operating at that level of dominance in hardware for over a decade. Every time a PC was built, there was an overwhelming chance that Intel was inside it. You saw the little sticker? All right. Every corporate laptop, every home computer, every server, Intel, that kind of market control prints money. We love it. It prints money. It funds research. It builds moats. It lets you set prices. It lets you be slow and still win. Because your competitors just don't have the resources to catch you. And that is exactly what made and exactly what happened next so shocking. So what I'm about to show you now is a shocking fact. It's a fact that is shocking, and it's a shocking fact. Are you ready for fact number 4 as we come back to the live stream? Who's in the chat? Let me come back to see who's here right now. We got Stephen Lewandowski in the chat. He says, yes, I never sell for losses. I just hold. That's right. I've been making money all bloody day. In fact, I'm going to go and check my my money as it arrived in the UK. I've been checking every half an hour. It's ridiculous. Nope, still stuck in the bank. Still stuck in the bank. I'm bloody sick of it. Trying to buy Coca-Cola today. Anyway, defense, Coca-Cola, he's in that. Coke and a little Jack. You can't go wrong. Super Grok 3000 with extra spare batteries. Yeah, thank you, Az. He mentioned it earlier. Watching at work, said Defense. You're at work? What do you do for a job, mate? What do you do for a job? Zachzai is driving. Shocking. It is shocking. It's a shocking fact that is shocking. It is fact number 4. Are you ready? Okay, this is the pivot. This is the dramatic moment. Okay, fact number 4. Have you tapped the like button? Yep. Okay. Have you hit subscribe? Yep. Okay. Okay. Fact number 4, the fall. It didn't happen overnight, but by the time most investors noticed it was already too late. Ignore. Intel had malfunctioning problems. We should play some sad music for this. I think we will. Let's play some sad music. Here we go. Sad music. I know. It got sad now. Shall I do that again? I'll fade that in. I'll fade that in again like that. I'll fade it in like that. There you go. Sad music. Intel had a manufacturing problem. For years, the company had stayed ahead by shrinking its transistors faster and faster than anyone else, moving from 14 nanometers to 10 nanometers. That's a little bit, basically, it's small. To 7 nanometers and beyond. Smaller transistors mean faster, more efficient chips. But Intel got stuck. Their 10 nanometer process, which should have launched around 2016, was delayed. Their dominance was over. I feel like crying. Does anybody feel like crying? I might cry. I tell you what, I can't bloody breathe. Anyway, in a minute, literally, I'm not crying because of Intel. I literally can't bloody breathe. Anyway, we'll keep going. I'm either going to live or die. I mean, it's one of the two. Then delayed again. God's sake. I mean, 50-50, isn't it? Going to live or die. Then delayed again. Then delayed again. And finally, delayed again. Years of slippage. Years of excuses. And while Intel was stumbling, AMD, a company that had been in distant second for years, quietly partnered with Taiwan Semiconductor, TSMC, and started producing chips on a more advanced process and released products that didn't just compete with Intel, they beat Intel in their benchmarks, in power, in efficiency, in price, and in performance. For the first time in a generation, IT departments and PC builders had a genuine reason to choose the other guy. And they did. Sad, isn't it? Such an exciting start. See, I told you that these earnings calls wouldn't always be, I love everything. I'll tell you how it is. Intel's market share eroded. Its stock underperformed. Its reputation built over 50 years cracked and fell apart. Now, here's why this matters tonight, because when Intel talks about the process roadmap on the earnings call, this is the wound they're still healing from. Any commentary about manufacturing, yield processes, node progress, or competitive benchmarks, that's code for, are they fixing this or not? See? I told you learn stuff with this channel. You never thought about that, did you? You won't get that from the bros with the baseball caps and the bloody earplugs. You won't get that. You get that here. Click subscribe. It's now fact number 5 as we go back to the audience. Back to the audience. Stephen Lewandowski says, Coke cure everything. Year 1996, Intel Israel in Kiryat Gat. I saw the first robot. AI fixed his mistakes. That's from Zaxite from Israel, now live in California. I've got Intel in my studio PC. They don't do stickers anymore. Shall we go to... Oh, we got another message here. This is Shogun. Shogun says, guys, I'm going to do a coin toss. Getting $3,500 of INTC shares just for the earnings. Go for it, mate. We wish you all the very best of luck. Fact number 5. Are you ready? Here we go. Intel is one of the last integrated chip makers in the world. You knew that was coming, right? Bit of Jeremy Clarkson. Okay, let's go then to this fact. Let's see what you make of this. So fact number 5. Let's do it. And this one is critical for understanding everything else. Most people don't realize how unusual Intel really is. The modern chip industry has largely separated into 2 types of companies: designers and manufacturers. Companies like Nvidia and Qualcomm designed chips but outsource the actual manufacturing to foundries. Primarily TSMC in Taiwan. They called fabless. Fabless companies. Not fabulous, but fabless. Fabless companies. Intel does both. It designs and manufactures its own chips. And this is a big deal, by the way. If you've ever known how to try and build a foundry and stuff like that, you got to like go like meters and meters and meters down in the ground, because the slightest movement of the earth, and the earth's always moving, the chips are busted, buggered. You have to have, it's very hard to achieve this. Anyway, this is what makes what's called an integrated device manufacturer, an IDM. They are almost none of these left on scale. There's not. Now, on the surface, this sounds like a superpower. Yes, it is. And it was when Intel was executing perfectly. Owning your own fabs means tighter control, faster iteration, and theoretically better margins. But it also requires enormous capital, it's capital intensive. Look at the stock now, look. There we go. The bell has just gone. Let's ring, ring, ring. The stock is moving. We'll keep you updated with all the numbers as they come out. What we got right now is that the stock is trading ahead of the numbers, and people are getting all excited. You know what it's like. I don't play silly buggers. I don't play games like that, but people will. People will. All right, let's carry on with our numbers, and we'll bring you all the numbers precisely as they are delivered, accurately and checked. We're talking billions of dollars per factory. And when your manufacturing falls behind, as we discussed in Fact 4, you can't just call a better foundry. You are the foundry. You have to fix it yourself. That vertical integration is both Intel's greatest potential advantage and its greatest source of vulnerability. Keep that tension in mind, because the next few facts are all about how Intel is trying to weaponize that structure instead of being crushed by it. Okay. Let me check the numbers as they're all coming out now. Let me put you on top of all the numbers as we go on to the. By the way, if you've not been following the news, the war in Iran is just completely collapsed. Trump is now firing generals, literally firing army generals. We've got negotiators resigning. No one's talking to anybody. Literally, we've created such chaos. Get ready for one of the worst recessions in history, and the carry trade unwind is just going to be enormous. So this is why I'm not chasing the S&P, why I'm remaining in the market, and why I'm going defensive, because there is so much uncertainty around. Anyone who buys a pump is off their flipping head. Just saying, all right? Let's go back to the chat. Chart, says Shogun. Intel pumped. Yes, it did. But 2.5% is not going to get me excited on a thing that can go straight back down for no apparent reason. All right? That's not what we do. I've been trying to talk to you all night about the numbers, the facts, the history, what the company's all about. And I'm not going to be running up 14% now. We're up 14% now in the after hours. Oh, God, blimey. Let me bring this in. We've got a star guest on the show.
A Defense 89 tipped $2 Canadian through Super Chat. Trump asked nuclear codes lately and was denied.
Yes, I told Sensei right at the beginning of this. Oh, it's a massive beat. It's a huge beat. 29 cents per share from losing money. It's a massive, massive night for Intel tonight. Yes, it's a huge beat, a record-breaking beat. Absolutely fantastic. It is a huge beat. 29 cents beat. It's massive. Let me show you how that looks in a visual representation. If we go back here, we've got losses. We've got barely breaking even. We've got just about breaking even. We've got losses. And look at that. Boom, 29 cents a share from expecting to be negative. It's a big night for Intel tonight. Congratulations, anybody who is owning Intel. It's a huge one. It's a huge beat, up 17%. This will take the market up. The S&P might move on it. Not much. It's trying to, but barely doing anything. That's not where the money is. The money is in defensive Coca-Cola. Nothing now is going to prevent a recession. Nothing is going to prevent a carry trade unwind, and it's not good at all. So anyone who's running out to buy this tonight, well, I'd be very, very careful indeed. Okay, let's carry on. It's a great beat. Congratulations to Intel. Very, very good. A legacy company coming back. Absolutely wonderful to see. But I wouldn't be getting too carried away. We've got, how long have we got before the earnings call? I've got exactly 55 minutes. So we're going to carry on with more news. We're on fact number 6 right now. Anyway, great stuff. Congratulations to Intel. Tap the like button. Here we go. Let's go. Let's fly. Hello, says Liz. How are you? Late again. You're always missing the shows these days. Nice information. Thank you, mate. Really appreciate it. Here is fact number 6 as I bring you the next one. It's going to be a big night tonight, but be careful. Pump and dump tonight, and there it goes already. Who the hell is buying a 6? It's crazy. But people do, and they lose their money. It's why we never lose money on this show. Anyway, fact number 6. Here it comes. The 100 billion gamble. The $100 billion gamble. This is what it's all about. Fact number 6. Tap the like button and consider subscribing. I'd really appreciate it. Here we go. Intel is not tinkering around. It's not. They are making one of the largest capital investments in corporate history in the world. We're talking about a multi-year plan that stretches well past 100 billion. Think about that for a moment. Across new semiconductor or fabrication plants in Arizona, Germany, Poland, and Israel. You heard from moments ago from Zach's side, from Israel. He was just telling you all about it. Think about that for a moment. Not one factory, not two, a global network of next generation fabs being built simultaneously. Now, remember I explained earlier about Intel and how important that was, or how dangerous that can be. That's what they're doing. That's why they know the future is AI, chips. It's what it's all about. And they're building their own foundries. We haven't had a foundry explosion en masse like this for decades. This is a huge moment. The Ohio facility alone, which Intel calls New Albany, is projected to be one of the largest chip manufacturing sites ever constructed on American soil. When fully built out, this is a bet the company the biggest bet the company's ever moved. Intel is essentially saying we fell behind and we know it. That's what it's saying. Okay, we fell behind and we know it. And we are going to spend whatever it takes to come back and win. Now, the risk, if demand for chips shifts, if technology changes faster than they can build, or if execution stumbles again, this investment could become a massive liability. But nobody believes with AI and all the rest of it that chips are actually going to fail. This is the future, unquestionably. So Intel is a good business, just don't overpay, right? And they've got to get it right, and I think they will get it right. They've learned from their lessons. Let's look at the reward. The reward, if it works, Intel becomes the most important semiconductor or manufacturer in the Western world. Nowhere near like what it is in Asia and so on and so forth. But in the Western world, yes, it does. Irreplaceable, untouchable. So tonight, listen in the earnings. We'll cover it live in 15 minutes time for any updates on fab construction timelines. Now, this will bleed into Vaz. Vaz, are you in the chat right now? This will bleed into EVs. This will bleed into vertical aerospace, Archer Aviation, all the eVTOLs. These chips are what drives all of that innovation. All of it. So timelines cost, overruns cost, customer commitments, all of this stuff, those details will tell you how this bet is tracking. And that is what we're going to learn tonight from the earnings call, which is why you've got to stay with me. So we're going to go on to fact number 7. Yeah, Vaz is here. He's loving it. Tap the like button, everybody. Okay, and consider subscribing as we move on to the next fact. It's a big night for Intel tonight. Who have we got in the chat right now? We've got the big burn. Nice one, Shogun. Could have just missed being minus 17 there. I hate Intel. Could have just been minus 17% there. I hate Intel. Ha, 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 he said. Did you make that profit? Did you get in on time? Congratulations, mate. A big gamble, that one, but it paid off for you. Anyway, hey, says Potato Family. Yes, said Vaz, just come back. What about NVIDIA and AMD? Well, if someone does a $20 super chat, we will cover the AMD or NVIDIA earnings. It's up to you. It's a members perk. It's $20 to book an earnings call. If you'd like to book an earnings call, first come, first serve. We will cover the earnings. NVIDIA would be very exciting. Can you imagine the 10 facts I can put together for that? Oh, yes. Who's going to book one of these shows? Oh, and by the way, if you want a full performance like this for your favorite stock, you can. All right? For $20, you can book an earnings call and I will do a full fact check event like this. Now, if it's not an earnings call, you just want one of these made, all right? You can do that too for your favorite stock, which will rank it up, right? That's how it works. Who else we got in the chat? Me, William Bond is here. I am in the chat. Hello. Let's go on then to fact number 7. Intel wants to be TSMC TSMC's rival. Can it do it? Let's go to fact number 7. Here we go. Tap the like button. Let's get straight into it and consider subscribing. Here we go. We'll come back to the chat right after this. So Intel wants to be TSMC's rival. Can it do it? Well, fact 7 is the plot twist to all of this that most casual investors completely miss. They do. This fact now is one that most people never understand. Intel isn't just building fabs for itself anymore. Did you know that? Oh, Craig Wood has just become a subscriber. Big shout out to Craig Wood. If you'd like to become a member of the channel, get all our members perks. There you go. After this, of course, it's our final event of the day on Discord where we break down the facts. I share all my trades with you. There's Discord. 90% discount. It's always 90% discount. It's always a couple of bucks. I make money from investing. I started at $5,000. I'm just coming up to $700,000. All my calls have been spot on. All my trades have been winning for 3 years now. And tonight in Discord, I'll be sharing all my trades and so on and so forth. This is my portfolio. Oh, Coca-Cola taking a little bit of a trim after hours. I've got 700 grand invested there now. Anyway. The company has launched what it calls Intel Foundry Services, a business unit designed to manufacture chips, for other companies, just like TSMC does. They're bringing it home to the United States. It's about bloody time, really, isn't it? Let that sink in for a moment because it's quite unusual. Intel, which for 50 years was defined entirely by chips with the Intel name on them, the little sticker, now wants to be the company that makes your competitors chips too. This is a whole new thing, and you need to understand that if you're an investor. If you didn't know that, as most investors don't, you don't know what you're investing in, and you should. That's important. This is a fundamental reinvention of the business model. The opportunity is enormous. TSMC has shown that a leading-edge foundry can be one of the most valuable businesses on the planet. And with geopolitical pressure to reduce dependence on Taiwanese manufacturing, customers are desperately looking for alternatives. This is a big thing. The challenge. Trust. Why would Qualcomm or Apple or Nvidia hand their most sensitive chip designs to a company that also competes with them? Think about it. That's a delicate sell, a very delicate sell. Intel has been signing deals, but the foundry business is still in its early innings, and it's so bloody expensive, this could cripple and damage Intel. It's a kind of all or nothing deal, this, folks. So tonight in the earnings, any announcement about new foundry customers or the loss of expected ones could move the stock significantly. Okay, let's go back to the chat. We're in the chat right now, and we got defense. Market closed now. Can't buy any more Intel. Yes, you can. Yes, you can. Defense, you can trade 24/7. Sorry, 24/5 on Robinhood. If you're watching right now and you want to trade 24 hours a day, 5 days a week, there's my Robinhood USA link. Get that, you get free shares. I'm not sponsored by them, but you do. All right. There's Robinhood UK. If you're watching from the UK, Robinhood UK. It's in the chat. Also below in the description of this video. You can watch it later. Okay. If you want my Discord, all my trades, one-on-one service, help, all that kind of great stuff, there's Discord. Only a couple of bucks. Never goes up. No inflation. Never will go up. There's no inflation. No coupon codes. It's just always the same price. All right. A couple of bucks. I make money investing, and there is YouTube membership. So in the chat, we've got Let's Go from Mikos. How you doing, Mikos? Congratulations, Shogun. Thanks, mate. Just made loads of money. Proud of you, mate. Well done. You have a calendar with all earnings dates. Yes, I do. Would you like to see them? Here we go. Yes, you asked me. Of course, I bloody got it. Here we go. Before I come on to fact number 8, have I got time? You've got 45 minutes before the call. We can't be late. We can't be late, can we? So here we go. This is where we are today. So let's forget today. Tomorrow morning, if anybody wants, tomorrow morning, Procter & Gamble, I will cover it for you. SLB, HCA, Charter, $20 super chat. I will cover your earnings and provide you one of these big, long, fact-checked analysis reports for you. Not bad, eh? Not only does it promote your favourite stock, but you learn everything there is to know about it, and it's all for $20. I mean, seriously, right? That's tomorrow morning. Procter & Gamble, SLB, HCA, or Charter. You've got like a few minutes to decide because I'm just making that a rule. If you tell me tomorrow, it's too late, isn't it? Right. What about next week on Monday? Verizon, Domino's Pizza, Celestica, Cadence, Amcor, Nucor, Bro. And we got Bro. The Bro channels will love that. RMBSR, Public Storage. Then we've got on Tuesday, Coca-Cola. Nobody's booked Coca-Cola earnings. Who is going to book Coca-Cola earnings? Coca-Cola earnings on Tuesday morning. I've got 700 grand. $20 will cover Coca-Cola earnings. Who's going to book it? Somebody might go UPS, S&P, Spotify. No one's booked it yet. BP, Corning, GM, all sorts for you. After hours on Tuesday, Visa, Robinhood. No one has booked Robinhood yet. Starbucks, Waste Management, Seagate, B, T-Mobile, BH, Enphase Energy. Enphase Energy. The stock going to $100. $20, you can book an earnings call and get all of this. On Wednesday, SoFi, ABBV, LMND, AF, ADP, Etsy, General Electric, Garmin, plus more. After hours, big one, Amazon, Microsoft, Meta, Google, my boss. They always mention me. They're going to be talking about YouTube. Oh dear. Oh dear. All the views going now to ChatGPT. Google's not happy. I'm not happy. Google's not happy. YouTube's not happy. That is on Wednesday. Qualcomm, CMG. We can do 3 earnings a time. If we have 3 super chats, Sensei, Vaz, and me can all go live at the same time. We love doing it. It's a lot of fun. Right? What else have we got? On Thursday, Lily, MasterCard, Cat. That's what's in the morning. Altria. In the evening, we've got Apple, Reddit. God, what a bloody nightmare that place is. Rivian, Zeta, SanDisk, Roku, take your bloody pick. All right. What about on Friday? Chevron Oil. That'll be interesting. Chevron Oil, ExxonMobil, Colgate, clean your bloody teeth. All right. Linda. All right. Estee Lauder. We can cover a few pharmaceutical things, makeup and lipstick and pair of tights. All right, ladies' hosiery, all that. So there you go. Okay, let's carry on then. I gave you the information. Let's get into it. Let me just go back a minute. There we go. Thursday, 23rd. Right, I'm back in the right place. Okay, let's now move on to fact number 8 for Intel. You excited? We've got 40 minutes before the earnings call. Ah, dear me. Let's have a look. Are you ready? Here we go. Fact number 8. Let's get straight into it. The AI battle Intel can afford to miss and to lose. So here we go with fact number 8. Tap the like button and consider subscribing. I hope you're loving it. Let's go straight into it. They cannot afford to lose this one. Let's go straight into it. Fact number 8. This is where we get to the heart of the current narrative, where we stand today. Artificial intelligence, AI, has changed everything about the semiconductor industry. Nvidia went from a graphics card company to a $2 trillion AI infrastructure company in what felt like 18 months. It wasn't. You ask Jensen Huang, but it looked like that to us. Not to him, it didn't. It's a lifetime of work. The demand for AI accelerator chips, GPUs, custom silicon, memory is unlike anything this industry has ever seen before. Intel is late to this party. Bit like Apple is late to AI. Think about it. There's no polite way to say it. There isn't, so I won't, because I'm not polite anyway. NVIDIA's CUDA ecosystem has an enormous head start. AMD has made real progress. Even Google and Amazon are building their own custom AI chips. Intel is fighting back. Its Guardi AI accelerator chips are real products with real customers. The company is pushing hard on software capability, price per performance, and partnerships with major cloud providers. But the window is closing. AI infrastructure decisions being made today by hyperscalers, by enterprises, by governments will lock in chip vendors for years. Tonight on the earnings, watch for any mention of Gaudi adoption, AI chip revenue, or data center growth. If Intel is gaining ground in AI, this story looks very different than if they're still losing share. This may be the single most important data point in the entire earnings release. We are going to be paying attention to that tonight. So make sure that you are listening out for that. Okay? Tap the like button. Have you all done that? Have you considered subscribing? Have you all done that? Okie dokie. Let's go now into fact number 9. Before we do, let's go back to the audience. Intel stock. Frederick, I haven't forgotten your stock, mate. I know it takes time. I've got a lot to do. I haven't forgotten you. What is the expected volatility of Coca-Cola Shogun? As a good one. I'm not worried about the volatility. I'm focusing on the price of $90. Couldn't care less about the volatility. I already paid for SLB. SLB, let me check that. SLB. SLB. Yes, you did. 24th, tomorrow. Yes, tomorrow morning. You're correct. You are correct. Potato Family has booked SLP before the open in the morning. You're absolutely right. There it is. I've got it and I'm looking right now. Let me bring it right to the top. Thank you very much indeed. You are dead right. You are dead right, mate. That is set for the morning. Bloody hell, I've got a lot of work to do to get that done. Stoner Crozes. That's tomorrow morning, early. Got to work late tonight to get that done. All right, let's get round to fact number 9. So tomorrow morning, SLB will be covering it in the morning. Fact number 9. Intel is now a matter of national security. Fact 9, and this is the one that changes the risk calculus entirely. The United States government has made a decision. America cannot be dependent on foreign semiconductor or manufacturing for its national security and economic future. I have to agree. I think it's great. Totally right. That decision led to the CHIPS and Science Act. Good stuff. A landmark of legislation that allocated over $50 billion in subsidies and incentives to bring advanced chip manufacturing back to American soil. Intel is the primary beneficiary of that policy. The company has secured multi-billions in direct grants and loans from the United States government. Intel's Ohio, Arizona, and other domestic facilities are central to America's strategy to compete with China in the chip race. Wouldn't it be nice if we all just got on? Let China make the chips. Let America make something else. And we all just be friends with each other. God, it'd be so much easier, wouldn't it? It's not going to happen though, is it? China. It's all about bloody China, isn't it? Anyway, what this means for investors. What does all this mean for investors? Intel is no longer purely a market-driven story. It has a strategic backstop. The US government has an enormous incentive to see Intel succeed and the resources to support it. This doesn't make Intel bulletproof, however, but it does mean the downside scenario, bankruptcy, collapse, being swallowed by a foreign competitor. It's politically unacceptable to Washington. Intel is in a very real sense infrastructure, and governments don't let critical infrastructure fail quietly. We're now coming on to fact 10 with half an hour to go before the earnings call. It's getting exciting. So, as everyone tap the like button. I can't believe we got 48 likes. What is going on? YouTube numbers, every YouTuber is complaining about it. ChatGPT, numbers are down everywhere. YouTubers are giving up. I'm not going to give up. I'm going to work harder like I'm doing right now. It's tough though. It hurts to see the numbers so low. All right, consider subscribing. Be part of it. All right, let's get to it. Let's get round to it. Fact number 10. This is the last one. And then, of course, we have the big earnings call itself. Let's get into the chat once again and bring you all into the show. Vaz, Cat, big energy market player for the coming years. Thank you so much, Vaz. Thanks for the information, Defense. You're very welcome, mate. It's very tough. It's very tough. You don't make money out of live streams. People make videos to make money, but that's now being crushed by ChatGPT as well. But I just want to go live and entertain people. But this is tough. This is tough. What would be 1,000 people watching is now 157. This is massive, folks. Anyway, we're going to work harder. We're going to stay with you, and we're going to be here through all the hard times. Good one, Potato. Yep. Okay, Martin. Thank you, Frederick. I appreciate your patience. I want an excellent report on SLB. Yeah. With 20 facts, mate. You only paid $10 bloody, right? I mean, I'm already getting out of bed at 4 o'clock in the morning to cover the earnings for you, right? There'll probably be like 8 people watching by tomorrow morning. And now you want me to study and spend the next 3 hours putting together 20 facts for you with a slideshow for $10. What's that, about 10 cents an hour? I can't do it, mate. I can't do it. I'm out of oil. Too volatile, mate. It can't be in oil, can you? It's crazy. From everything you are telling in this video, I am starting to actually feel like Intel is a stock to keep. Maybe a 3 to 5% position. Well, I hope I've helped you, educate you. I'm really pleased for you, mate. It's going up nicely. It's doing very well. It's going to do well. And just thought I'd let you know. I do think it is. That's why I own the S&P. I own it anyway. All right? Anyway, let's get straight into it. Fact 10, the real question. The last thing before we go into the earnings call. Are you ready? Fact number 10. Tap the like button. Share this out when you see it. And consider subscribing. Let's rock and roll. Fact 10. The one I missed. The one I promised. The one I missed intentionally and shared with you at the end. Here it comes. This is what I promised you at the beginning would be the most important one, and I was right. Here it is. Everything we've covered tonight in this show. Good morning, good afternoon, good evening. You could be watching different times. The history, the fall of manufacturing, the foundry ambitions, the AI push, the government support. We covered all that. Remember all that? We did all that live on this show tonight. It all leads to one question. And it's the question every serious Intel investor is sitting with right now. At least you should be. Is Intel a comeback story or a value trap. Here's how you tell the difference. I don't know if I should tell you this. Oh, I got a super chat. Oh, okay. Bloody hell, look at this.
At Potato Family 3958 tipped $1.99 through Super Chat. Okay, 21 facts then.
21 facts then. Bloody hell. Oh my God. I don't know. I tell you what, in the chat, are you enjoying these new shows? All the facts, all the research, all the slideshows, all the production. This is brand new. I've only been doing this now for about 3 or 4 days. Are you enjoying it? Are you getting something out of it? Is it providing value? We're trying to compete. We're not competing because no one else does it, but we're trying to rescue YouTube, be more engaging, provide more value. When everyone's quitting YouTube now, we want to go stronger. We want to work harder. This is the moment when people win, and that's why we're doing it. So here's how you tell the difference. A comeback story that has correctly diagnosed its problems, has a credible plan to fix them, is executing against that plan, and is trading at a discount because the market doesn't yet believe the turnaround is real. A value trap is a company that looks cheap, has a compelling narrative, has smart people working on it, but where the structural headwinds are simply too powerful to overcome. And the stock stays cheap forever or gets cheaper. Both stories are possible with Intel. The facts you know, the facts you now know are the inputs. The earnings call tonight is the next data point. And as we talk about it, the stock is rallying up very nicely indeed. Very nicely indeed. It always happens on my reviews and my analysis. Have you noticed that? And here's the specific framework I want you to use as you listen. Is gross margin expanding or contracting? Expanding margins mean the expensive manufacturing investments are starting to pay off. Is the Foundry business gaining real traction? Tier 1. Customer wins matter. Vague language about pipeline does not. We got a new subscriber. Fantastic. I want to welcome in every subscriber because YouTube at the moment is dying. ChatGPT is taking all the views and people aren't getting the views like we used to. It's tough. So I'm working harder because I'm expecting to see YouTubers all collapse, give up, go home, and I'll be the one left. Just me and Mr. Beast. That'll be it. If you're live, if you provide value, you'll survive. But it's tough because I won't change the quality. I won't make this the pump and dump channel. I won't tell you you're going to get rich in 5 minutes. I have to do a great show, but it has to be truthful and useful and helpful, not just BS to get views. That's what's being crushed on YouTube, and those who are still doing it are still surviving, but they will eventually die off, and I'm hoping that happens because it serves of no use. No value. If you live your life just conning people to make money, your life was useless and valueless and you served no purpose. And I cannot and will not do that. So, moving on. What is management saying about the AI chip roadmap? What are they saying tonight? Specifics are confidence. Generalities are spin. Is guidance going up or down? This is always the final tell. If you walk into the earnings call knowing these 4 questions tonight and the 10 facts behind them, you are better prepared than 90% of the people watching this live show right now. Trading this stock. Absolutely right. You are. Oh, we got a special guest. Let's read this out.
At Potato Family 3958 tipped $1.99 through Super Chat. Heads up, this Saturday will be VAZ 200 episodes.
It will be. This Saturday is a special event. It's VAZ's 100. Or Vaz has just mentioned, please check scheduled live. Oh, hang on a minute. Vaz has just sent me a message. Vaz has just sent me a message in the chat. Let me go and check what it is. Let's have a look. Let's have a look. Oh, there it is. There it is. Right. On Saturday, we have a special event. We've all had milestones on this show, and Vaz is no difference. Vaz has his very own. I love it. This is absolutely brilliant. So look at this, folks. Let me give everyone the link to this. This is great. Let me give you the link to this. Special event. Oh, I like the cigar, Vaz. That's brilliant, mate. I love it. Look at this, folks. This is happening on Saturday morning. Vaz, live, off air, 200 EVTOL shows later. Look at that. He's got his, isn't that awesome? That is a great image. He's got his cigar. That is just brilliant. I'm loving it. Absolutely loving it. All right. So on Friday, this is what we're going to do. On Saturday, beg your pardon. Here is the chat. There is the show in the chat, right? There it is. Go there right now. Click like, click remind, share it, stick it on your socials. It's a private members only event. Special guests are going to call in. Can't imagine who they might be. Right? Special guests, whiskey. I might even get a cigar and join in. Bugger it. That'll annoy Leah. Imagine that. Sitting in the house smoking a cigar, setting the alarms off. That would do her head in, that would. All right. Anyway, behind the curtain insights. That's what's promised on I tell you what, that is a great thumbnail, Vaz. Absolutely spot on that. I'll give you that, Vaz. That's a good thumbnail. In fact, that's your best ever thumbnail. Who reckons that's Vaz's best thumbnail? Definitely. That is on Saturday. 200 videos, 200 live streams. That's what Vaz has done, and he wants to celebrate it, and he should do as well. It's bloody hard work, especially in Vaz's sector. Really, really tough. Really tough. It's a new sector where no one is focused on it, and yet he goes live. He does the videos. He puts a show on, no matter what, and I love him. He's brilliant, okay? I love Vaz. He's fantastic, all right? This is it. So there's the link in the chat. Make sure you all go there now and do it, right? All right. How long have we got? We got 19 minutes. So here's where we are now. The Intel earnings is 20 minutes to go. We're going to cover it live. We're going to be there. We're going to cover the earnings live. And you now know the real story. You know all about Intel now. You know as much as I do now, which is a bit of a problem now because you might not watch anymore. I'll find some new facts for next year. Don't worry. You now know the full story. Not the headlines, not the hot take, but the architecture of this company. And what tonight actually means. In just a few hours, the numbers will be all out, all over the place. It'll all be processed. We'll be up, we'll be down. We're going to be here live, breaking it down line by line as the earnings happens, right? So don't go anywhere. Revenue margins, guidance, the CEO commentary, the tone of the call. We'll read it all out for you, all together. And then we make a decision together with conviction. If you're new here, please tap subscribe, consider subscribing, be part of it. And the earnings call is here. We're about to do it. So I want to thank you all for tuning in for the 10 facts. Tomorrow morning, we're doing it again. SLB for potato. I mean, I can't believe it. I'm getting out of bed at 5 o'clock for a potato. What the hell? What has come of my life? Anyway, that's what I'm doing. So tap the like button, consider subscribing, and share it on your social media, because tomorrow morning it's SLB. More of this nonsense. Earnings call. Now then, this is the event. This is the event that I want to bring to you. Have they got it out yet? Yeah. No, it's nothing to look at. It's a blank screen. Let me see if they've refreshed it. They will in 3 minutes, they will. Yeah, there's nothing yet. Yeah, there's the rubbish music. There's nothing there at the minute. You have to bear with me. Now, all the way through this show, we've been running a poll. 2 polls, in fact. I wanted to see how you feel about this. So we're going to end the poll now with 156 votes. Is this a buy, hold or sell? Buy 39%, hold 19%, sell 22%, undecided 20%. So the buys have it. I'm going to end the poll. Now remember that number, 20%, because this is the poll that trends on Google. This is our Lucas Archie. It's much better than the Fibonacci. Our Sensei, he'll tell you. The Lucas Archie, this is an indicator, is very, very accurate. We find this. Here we go. There is the link there to the post, the community post. And let me refresh it. Let's have a look. How did you vote? Here we go. 24 votes. Oh my gosh. That's terrible. No one cares. Isn't it awful? Isn't it awful? We used to have such big numbers for this sort of stuff. And ChatGPT is absolutely crushing everything. It's like, right, there'd be like 300 votes here now. 24 votes. Got 112,000 people. 24 people care about Intel. Isn't it awful? Bloody hell. 29% buy. 13% say hold. And 29% say sell. And 29% say undecided. Oh my gosh. So it's like, it's a tie, isn't it? It's a tie over there. Anyway, there you go. We've got just 15 minutes to go. In a 1 minute from now, the call will be updated. You'll see the call get updated. The screen will get updated. They might have some slides. They might not. We won't know. But we will know in exactly 1 minute from now. All right? And then we're there. After this, there will be a special event on Discord, as there is every day. We do 2 stage events every day for our Discord Pro members, where I'll be sharing my trades, what I'm buying, what I'm selling, all of that stuff, answering questions, one-on-one support. If you want to know how about tax lots, if you want to know about tax harvesting, if you want to know how to win consistently like I always do, you can then join me for that event tonight. That'll be right after this call. Right. I'm up today. I've beaten the market again. So there you go. If you want to join me on Discord, there's Discord. 90% discount. It's only a couple of bucks to be on Discord. And it never goes up in price. I could charge a lot more than that, but I don't, because I like helping people, right? So there you go. I'll onboard you. I can onboard you now, actually. I've got 15 minutes. If anybody wants to do it now, I'll onboard you. If you want YouTube membership, there it is as well for all the perks and benefits. If you message me, I'll always comment on the videos. If you do a comment on a video, there's members-only videos, members-only live streams, all that stuff. What I'm going to do now, as we've got 15 minutes to go, is I'm going to go over to Discord and I'm going to onboard those of you that need to be onboarded. So just bear with me as I'm just waiting now, reading some comments. Okay. Tris. Is Tris trying to join the server? Let's have a little look. No, that was already done. Just want to make sure. Okay, just want to make doubly sure. Let's have a look. I can deal with that later. Okay, the earnings call is about to begin. We got 14 minutes to go now. So let's get ready. We'll start preparing a few things. Oh, I'm excited. I want to hear what they have to say. After all of that history, all of that stuff, let's see what they have to say, eh? It should be interesting. Why is that opened up there? Whoops. Hello. Open down here, you bugger. Right, let me just see. Yeah, that's it. Okay. Just sending something over here a minute. How long have we got now? 13 minutes to go. 13 minutes to go. before the call begins, and then we can all listen in and pay close attention to Intel. Is it for the future, or is it all as its best days behind us? We shall find out in just a short while, okay? Right. Do we have any? Oh, I've got some messages coming in on Discord. Okay, no new members. I've taken care of that. That's all good. All right, let's see now if the call has updated. Yes, it has. There it is. The call is updated in corporate colors. I'm loving it. Let me get rid of the music. So this is what they're displaying at the moment. This is what it looks like. This is what it looks like at the moment. This is the Intel earnings. If they show any slides, we'll be sharing it. If they don't, we won't. But we're all set for it in just 11 minutes time. Intel earnings. If you'd like to share this out to more people, that would be fantastic. Tap the like. I cannot believe we've only got 67 likes. It's awful to see YouTube go down. Their earnings call is going to be terrifying. I wonder if they'll even mention YouTube. 60% drop in all views across all channels in like a couple of months. Anyway, there you go. Consider subscribing. Let's get ready. We've now got 11 minutes. So if you've got any comments or questions, please drop them in the chat and I will endeavor to answer your questions. If you want to call into the show and you want to be live on the show, you certainly can as well. If that's what you'd like to do, you certainly can. All right. Thank you very much, William. William has just created my new channel thing, Majiggy, for my thoughts. Absolutely wonderful. Thank you, William, for doing that. I appreciate it very much indeed. Really, really great. Okie dokie. Okay, 10 minutes to go. Let's see how we do. Once we get to the call, I'll be taking notes. You won't hear from me. I'll be listening in for the entire call. And let's have a little look around tonight. Let's get a flavour of what's being said in social media. Always INTC earnings. Always good to see what people are saying. A lot of people must make up stuff, which drives me up the bloody wall. Look at this. Wow. Now this is important. I'll show you something now. Wow. Look at this, folks. I know a lot of you don't believe me. You're going, oh, you're just saying the views are down because you're rubbish. No, we're getting more views than anyone. Look at this. This is, if you type in Intel earnings tonight, okay, look at this. This is scary. A massive company. We are number one, right? We're number one. We got 147 watching, right? Normally a few thousand, right? That is ceasefire concerns. That's nothing to do with Intel, right? That's market close. Nothing to do with Intel. You've got down here 70 watching this channel, 62 watching this channel, 41, 45, 5. Isn't it incredible? Bloomberg broadcast 600. That's Bloomberg with like 2 million followers. 600. It's bloody terrible, isn't it? What's YouTube done? It's done something. Well, we know what it is. It's ChatGPT. ChatGPT is destroyed, but not going to destroy us because I don't think people actually want AI, ChatGPT. They want an experience, but they don't know where to go. So by staying live and new audiences discover you, I think we'll do all right. But it's just going to take time. Anyway, we shall see. Anyway, we've got 8 minutes to go. Let me go back to the chat. Let's see what we got in the chat. Thank you all. See you Saturday. Yeah, we can't wait for that. New rando in the house. Pump my bags, fools. Okay. All right. That's not what we do. If you want pump and dump channels, there are those. We consistently win. I've gone from $5,000 to $700,000 in my entire portfolio in 4 years. No options, no shorts, no crypto, no gambling. 5,000 to 700 grand in total. Right? We don't guess, we don't gamble, we always win. That's what we do. Okay? So we're not pumping bags, we're not doing all that stuff. That's not what we do, I'm afraid. Okay. Bearfly 426. Yes, you are number one. I just found you now since INTC went up after big hours, and I just sold prior. Oh, it's always the way, isn't it, mate? Martin Lucas on top, RV Capital Insight. Thank you, guys. Yeah, we'll win because you know why we'll win? Because we tell the truth and we provide real journalism and facts. And eventually, when people are sick and tired of losing money, they want facts, right? And they want live and they want real. So that's what, and you know, I work 12 hours a day. I'm never going to stop. I'm never going to give in. Right, 7 minutes to go. We've given you all the facts. The Intel earnings is about to begin. All right? Okay, let's get ready for the Intel earnings. Are you excited? All right. Have we got time at 7 minutes? Yeah, we have. I'm going to go and grab a drink. I will see you right back in 7 minutes' time. Let's take a break. Let's take a break. The Intel earnings is right round the corner. Here we go. Okay, we're back with the Intel earnings. So we're just waiting now.
Question and answer session.
Here we go.
To ask a question during the session, you'll need to press *11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press *11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Mr. John Pitzer, Corporate Vice President of Investor Relations. Please go ahead, sir.
Thank you, Jonathan, and good afternoon to everyone joining us today. By now, you should have received a copy of the Q1 earnings release and earnings presentation, both of which are available on our investor relations website, INTC.com. For those joining us online today, the earnings presentation is also available in our webcast window. I am joined today by our CEO, Lip-Bu Tan, and by our CFO, David Zinsner. Lip-Bu will open with comments on first quarter results, as well as provide an update on the progress we're making on our strategic priorities. Dave will then discuss our overall financial results, including second quarter guidance, before we transition to answer your questions. Before we begin, please note that today's discussion does contain forward-looking statements based on the environment as we currently see it, and as such, are subject to various risks and uncertainties. It also contains references to non-GAAP financial measures that we believe provide useful information to our investors. Our earnings release, most recent annual report on Form 10-K, and other filings with the SEC provide more information on specific risk factors that could cause actual results to differ materially from our expectations. They also provide additional information on our non-GAAP financial measures, including reconciliations where appropriate to our corresponding GAAP financial measures. With that, let me turn things over to Lip-Bu.
Thank you, John, and good afternoon, everyone. Q1 results demonstrate continued and steady progress across the business, reflecting strong demand for our products and disciplined execution to expand available supply. Revenue, gross margin, and earnings per share were all above the high end of guidance, marking our sixth consecutive quarter of exceeding financial expectations. Even as we improve factory output, demand continued to run ahead of supply for all our businesses, especially for Xeon server CPUs, where we expect sustained momentum this year and next. Intel 3-based Xeon 6 and Intel 18A-based Core Series 3 products are now in full volume production ramp, and each represents the fastest new product ramp in 5 years. We are maximizing and optimizing our factory output to meet customer needs. It is our top priority. Intel is now a very different company than when I first joined over a year ago. We have taken and continue to take deliberate steps to rebuild Intel into a more competitive and more profitable company. Our cultural transformation is well underway, and we are embracing our roots as data-driven, paranoid, and engineering-centric company. We are also listening closely to our customers and putting them at the center of everything we do. Intel possesses some of the most vital assets necessary to be successful and to flourish in this era of extraordinary opportunity for the semiconductor industry. With a stronger balance sheet, a new leadership team, a rejuvenated and motivated workforce, and a renewed focus on engineering execution, we are turning our attention squarely towards innovation to capture opportunities in the near term and to position the company for robust growth in the long term. Driven by tremendous demand for AI, the semiconductor industry TAM is now approaching $1 trillion, Intel is well positioned to benefit from this demand with three strategically important assets: our x86 CPU franchise, our advanced packaging technology, and our vast manufacturing network. Artificial intelligence is now moving into the real world towards a more distributed inference and reinforced learning workloads like agentic, physical AI, and robots and edge AI. This shift is now beginning to show up in our results, as I want to spend some time on this today. For the last few years, the story around high-performance computing was almost exclusively about GPU and other accelerators. In recent months, we have seen clear signs that the CPU is reinserting itself as the indispensable foundation of the AI era. CPU now serve as the orchestration layer and critical control plane for the entire AI stack. This is not just our wishful thinking, it is what we hear from our customers, and it is evident in the demand profile for our products. Xeon server demand is seeing strong and sustained momentum. Customers are deploying server CPUs along accelerators in the ratio that is moving back towards CPU. The accelerator remains central to frontier AI, and we will continue to participate, innovate, and partner in that category. Our recent announcement with SambaNova Systems is an example of such partnership on heterogeneous compute architectures. But the backbone of AI computing in production remains a CPU-anchored architecture. That is good news for the x86 ecosystem. It is great news for Intel. And it is a structural reason I'm confident that CPU franchise will continue to be a meaningful growth engine for the company in the years ahead, not just the quarters ahead. Turning to Intel Foundry, the accelerating deployment of AI infrastructure creates a meaningful opportunity for us as we continue to build our external Foundry business. I'm pleased with the progress we have made in Foundry technology development over the last year, even though I will continue to remind you this will be a long journey for us. We have made steady progress with Intel 4 and Intel 3. And 18A yields are now running ahead of the internal projections, representing a meaningful inflection in our execution and our factory finished good output. We also continue to make steady progress on our advanced packaging technologies, including additional growth in customer backlog in the quarter. On Intel 18AP and Intel 14A, we continue to be encouraged by our external engagements. Intel 14A maturity, yield, and performance are outpacing Intel 18A at a similar point in time, and we continue to develop PDKs with multiple customers actively evaluating the technology. Their partnership has been critical, and their feedback is continuing to help us define the technology so that we can cater to their needs. We expect to see earlier design commitments emerge beginning in the second half of 2026 and expanding into the first half of 2027. I'm particularly pleased that our progress today has driven us to land more of our own future product types on Intel 14A as well. At a time when advanced wafer capacity is in a short supply, this enables us to have better control over our supply chain. Intel has pioneered nearly every major innovation that has enabled dimensional scaling and high-volume manufacturing of silicon transistors over the last 6 decades. We have always been willing to take measured risks that have eventually paved the way for step function improvements in transistor density, cost, power, and performance. As we look to continue challenging the status quo, I can think of no better partners than Elon Musk. We recently announced our partnership with SpaceX, xAI, and Tesla to support Terafab. Elon and I share a strong conviction that global semiconductor supply is not keeping pace with the rapid acceleration in demand. We are excited to explore innovative ways to refactor silicon process technology, looking for unconventional ways to improve manufacturing efficiency that will eventually lead to a dynamic improvement in the economics of semiconductor manufacturing. A year ago, the conversation about Intel was about whether we could survive. Today is about how quickly we can add manufacturing capacity and scale our supply to meet enormous demand for our products. This is a fundamentally different company today, and we still have a lot of work ahead. I would like to take this opportunity to thank our many customers, partners, and our hardworking employees across the world for their contributions towards building a new Intel. I remain firmly convinced of and focused on the opportunity ahead for Intel. With that, I will pass it to Dave.
Thank you, Lip-Bu. We delivered robust Q1 results reflecting strong demand and better than expected available supply. We also benefited from improved product mix and pricing actions, in part to offset higher costs. First quarter revenue was $13.6 billion, $1.4 billion above the midpoint of our guide. Q1 revenue would have been meaningfully higher, but demand continues to outpace our growing supply. Our collective AI-driven businesses now represent 60% of revenue and grew 40% year-over-year. These results reflect real and deliberate changes we have made to be more responsive and accountable. This quarter, our teams worked directly and diligently with customers to reach mutually beneficial outcomes in weeks, not months. We value the partnership and support shown by our customers, partners, and suppliers as we work to navigate this environment together. Non-GAAP gross margin came in at 41%, approximately 650 basis points ahead of guidance due to the combination of higher volume, which included previously reserved inventory, mix, and pricing. In addition, better yields on Intel 18A offset some of the higher costs we always incur in the early part of ramping a new node. We delivered first quarter non-GAAP earnings per share of 29 cents versus our guidance of break even on higher revenue, stronger gross margins, and continued spending discipline. Q1 EPS included a roughly 6 cents one-time gain in interest and other. Q1 operating cash flow was $1.1 billion, with gross CapEx of $5 billion in the quarter and adjusted free cash flow of -$2 billion. Moving to segment results. CCG revenue was $7.7 billion, down 6% sequentially and better than our expectations. Even with improved factory output, demand outstripped supply against a client TAM that remains resilient despite industry-wide component shortages and inflationary pressures. Our AI PC revenue grew 8% sequentially and now represents greater than 60% of our client CPU mix. Operating profit for CCG was $2.5 billion, 33% of revenue, and up approximately $300 million quarter-over-quarter on improved mix and product margins, sales of previously reserved inventory, better 18A yields, and lower operating expenses. Within the quarter, CCG launched Core Ultra Series 3 and expanded our offerings across consumer, commercial, and edge. This has proven to be our strongest product launch in 5 years, delivering better performance per watt, stronger integrated graphics, and more capable on-device AI features, all while maintaining our broad ecosystem of compatibility that partners and customers value. In Q1, CCG also expanded the reach of our Core family by launching the Intel Core Series 3 processor, which brings the latest IP, modern features, and all-day battery life to the mainstream for the first time. We're enabling a new class of mainstream systems that once again set the standard for everyday computing. DCAI revenue was $5.1 billion, an increase of 7% sequentially and 22% year-over-year, well above expectations and reinforcing the strong year of growth for DCAI we signaled 90 days ago. Strength continued across all segments and customers, as investments in CPUs are accelerating to support the evolution of AI from foundational training to inference and from inference to agentic. We also saw strong ASIC growth with revenue up more than 30% sequentially and nearly doubling year-over-year. Operating profit for DCAI was $1.5 billion, 31% of revenue, and up approximately $292 million quarter-over-quarter on improved product margins, better cycle times and yields, especially on Intel 3, and lower operating expenses. Within the quarter, DCAI signed multiple long-term agreements, including Google, supporting our view that the current business momentum is sustainable. In addition, Xeon 6 was selected as the host CPU for NVIDIA's DGX Rubin NVL8 systems, and Xeon remains the most deployed host CPU due to its industry-leading memory, security, and networking orchestration. Lastly, DCAI also established a multi-year collaboration with Samba Nova to design a next-generation heterogeneous AI inference architecture combining Samba Nova's RDUs and Intel Xeon 6 processors. Intel Foundry delivered revenue of $5.4 billion, up 20% sequentially on increased EUV wafer mix driven by Intel 3 and significant growth in 18A. External Foundry revenue was $174 million in the quarter. Intel Foundry operating loss in Q1 was $2.4 billion and improved $72 million quarter-over-quarter as better yields across Intel 4, 3, and 18A drove higher gross margins. This was mostly offset by increased operating expenses associated with an intentional step-up in Intel 14A investments to support both internal and external customer evaluations. As a reminder, Intel Foundry carries the bulk of the costs associated with the early ramp of Intel 18A, and we expect Intel Foundry's operating loss to improve through the year as 18A continues to ramp into volume and yields improve further. Within the quarter, Intel Foundry delivered output above our expectations, drove steady improvements in yields, and met key 14A milestones. Intel Foundry also added to its backlog of advanced packaging services and announced a multi-year expansion of our back-end facilities in Malaysia. This expansion will help support the committed demand that will begin to convert to revenue in 2027. Turning to all other. Revenue came in at $628 million and was up 9% sequentially due to a strong quarter for Mobileye. Collectively, the category delivered an operating profit of $102 million. Now turning to guidance. As we look ahead, we remain mindful that the macroeconomic and geopolitical environments are dynamic. Views on global growth, policy, and trade continue to shape customer behavior and investment decisions. In addition, constraints and rising prices around key components like memory, wafers, and substrates are driving higher costs that could impact demand for our product at some point in the year. we're prudently planning for PC demand to weaken in the second half of the year and expect the full-year PC unit TAM to be down low double-digit % in line with industry peers and experts. Offsetting this, near-term customer order patterns remain very robust across all of our businesses. In addition, our confidence in the sustained growth of CPUs driven by the AI infrastructure build-out is growing. Our outlook for server CPU demand has improved over the last 90 days, and we expect a strong year of double-digit unit growth for the industry and for us, with momentum extending into 2027. Combining all of these factors, we're guiding Q2 revenue to a range of $13.8 to $14.8 billion, up 2 to 9% sequentially. As we work hard to support the needs of all of our customers, we expect sequential revenue growth in both CCG and DCAI on improved supply and a full quarter of pricing actions, with DCAI up double digits. At the midpoint of $14.3 billion, we forecast a gross margin of 39%, a tax rate of 11%, and EPS of 20 cents, all on a non-GAAP basis. Our Q2 gross margin guide declines modestly from Q1 due to a meaningfully larger contribution from Intel 18A, still early in its ramp, and some inventory benefits in Q1 that aren't expected to repeat in Q2. Before I close, I'll share some additional insights on the full year. We expect our factory network to continue increasing available supply in the third and fourth quarters, though at a more measured pace than we anticipated 90 days ago, reflecting the base effect of much stronger than expected first half output. We also expect 2026 revenue on a half-on-half basis to follow the seasonal trends experienced over the last 10 years, with servers above and PCs below. We were very pleased with Q1 gross margins, and we will continue to push for gross margin expansion. It's my top priority. Our Foundry team is delivering consistent yield and throughput improvements across all process nodes, which will help gross margins. With that said, Intel 18A is still early in its ramp, and rising input costs, especially in memory, present growing headwinds in the second half that we need to overcome. For OpEx in 2026, we have been directionally targeting $16 billion, but are likely to be higher due to inflationary pressures, variable compensation, and targeted investments we are making to capture the opportunities ahead. The drive for efficiency is core to the new culture Lip-Bu is creating, and we will remain laser-focused on finding additional operational improvements and maximizing ROI on all of our investing activities. We forecast capital expenditures in 2026 to be flat to last year versus our prior expectation of flat to down, reflecting increased capacity investments to support committed demand and a continued emphasis on improving fab productivity and output. We now expect expenditures to be roughly equal across the year and still to be heavily weighted towards the equipment that directly grows wafer outs to support growth this year and next. We recently closed the transaction to repurchase the 49% equity interest in the joint investment in Fab 34 in Ireland, a highly accretive deal allowing our shareholders to participate in the full economic benefits from a fab just now hitting its stride. As a result, we now expect non-controlling interest, or NCI, to net to approximately $250 million in each of Q2, Q3, and Q4 of this year, and be approximately $1.1 billion for 2027 and 2028 on a GAAP basis. Lastly, excluding the buyout of the Fab 34 joint investment, we still expect positive adjusted free cash flow for the full year. As a reminder, we funded our purchase with approximately $7.7 billion in cash and $6.5 billion in new debt. We remain committed to retiring all $2.5 billion of maturities as they come due this year and all $3.8 billion in 2027. In closing, Q1 was a strong quarter financially and operationally. All demand signals continue to emphasize the growing and essential role of the CPU in the AI era and the unprecedented demand for leading-edge wafers and advanced packaging to realize the vision of driving silicon-based intelligence to the edge efficiently and at scale. Our confidence is growing. We have the right team and the broad IP portfolio needed to solve our customers' most pressing economic challenges and drive long-term value for our shareholders. With that, I'll turn it over to John to start the Q&A.
Thank you, Dave. As a reminder, please ask one question and a brief follow-up in order to allow us to
If you could, guys, it helps the channel enormously. Please tap the like button and consider subscribing. We aim to bring you the best, the most live, most honest, real service on YouTube TV. Thank you very much.
Hey, guys, thanks a lot, and congrats on the quarter, and this is good news for the country, too. With regard to my questions, the first one is on LTAs.
Apologize for his audio. He has an audio problem.
And there's a comment underneath in the release that you signed other LTAs. And how are these structured, and how do they give you better visibility long-term in the data center business?
A good question, Ben. I think let me describe. Google is one of the multi-long-term contract agreement in Q1. And this is significant. Google, we have the Xeon IPO and building a long-term trusted partnership. This is very important for us. It's just evidence of a strong demand for our CPU and some of the ASIC business. That is important for us. And this is a good example of how we win in AI infrastructure build out. And then stay tuned. At the right time, we will announce other contracts. Dave, anything to add?
Yeah, maybe just to add, most of these agreements are structured with volume and pricing, and they're usually somewhere between 3 and 5 years. The Google one, I think both parties wanted to see an announcement. In some cases, customers want to keep that confidential, and we respect their desire to maintain confidentiality. So some of them we just didn't announce. It's a win-win, I think, in a lot of ways. We get a good understanding of the volumes that we can then build into our assumptions around supply. It's good for the customer because they know where the supply is coming from, and they get a good sense of what pricing they can expect.
Ben, do you have a brief follow-up?
Yeah, thanks, John. With regard to CapEx, is there anything in there with regard to investing in Foundry customers, or is that still not in there? And when do you think we'll hear more about that in the CapEx figure?
Yeah, I would say, let me unpack CapEx just for a minute. So what we're now calling it is flat year over year. The initial thinking was that it was going to be down. I think we kind of moved it last quarter to flat to down, and now I think we're looking at flat. And that is really a function of the current demand environment we're seeing. One thing to keep in mind, in the last few years, a lot of our CapEx spending was space, and I think we're actually in a pretty good position in space. We wanted to have white space available to move into when needed, and I think Lip-Bu and I both feel like we're in a good place. So we actually will be bringing the space spend down pretty materially, even though the total is flat. And so what that means is the tool spend is actually increasing pretty significantly. In fact, tool spending will be up year over year, 25% or so. And so, that's I think a function of the fact that we just see a lot of demand, and we want to make sure we're catching up on the supply front. And then as we get into next year, we'll have a better sense, I think, of what CapEx looks like for next year. As it relates to external customers on the Foundry side, our expectation, in which we've been pretty consistent on this through almost, I think, a year, is that we thought that customer signals would be more concrete in the back half of this year and into early next year. And so as we kind of pull that information together, combined with our own requirements, which are growing over time here, that'll give us a good sense of what supply we need over the next few years, and we'll be putting the spend in place. Lastly, maybe just to tack on, I think our relationship with the equipment vendors is quite strong, and so I think we have a pretty good ability to flex as needed. Naga and Lip-Bu are in regular engagement with all of the CEOs of the equipment suppliers, and so I think we'll be able to manage and course correct as necessary as we get a better sense of the supply dynamics for us, both internal and external, and move our capacity accordingly.
Thank you, Ben. Jonathan, can we have the next caller?
Certainly, and our next question comes from the line of Ross Seymour from Deutsche Bank.
Hi, guys. Thanks for asking a couple questions. First, on the CPU side of things, the server CPU side, can you talk about how Intel's positioned competitively? Is the strength that you're seeing more that the market demand is just that high, or do you believe that your product line actually has some competitive differentiations versus either other x86 competitors or ARM offerings?
Yeah, Ross, I think good question. So first of all, I think the feedback from the customer, CPU is very important when you move from training to inference. The inference side, I think in terms of orchestration, control plane, and also managing all the different agents with data, CPU is much more efficient. So I think the ratio of CPU to GPUs used to be 1 and 8, and now it's 1 to 4. And I think towards parity or even better. So I think the demand is very strong. And then secondly, I think address your issue question. I think clearly we are kind of continue to refine our roadmap in terms of at the end of the day is the best product win. We have a lot of changes in terms of the CPU architecture change to focus on optimize for the different workload. And then the other part is I think we have a very big advantage. We not just have the CPU, we have advanced packaging and Foundry. We can really effectively driving some of the changes more quickly to serve the customer in terms of their different workload. So I think overall, I think it's an exciting time that we call it the XPU. Besides CPU, we're also quietly building up the GPU with a new hire. And also we are moving into the accelerations and so that we can serve the customer from the edge and then to the physical AI and then really drive some of the new initiative to drive the competitiveness.
Ross, maybe one other thing to add is that it's obviously early in the Granite Rapids life cycle here, but so far the early traction has been quite good. So at least that's a positive step for the data center CPU business.
Ross, do you have a follow-up question?
Yeah, I do. Lip-Bu, it's following up on something you said in your preamble where you said a year ago Intel was trying to survive and now it's all trying to scale the supply. And that's a very positive change year over year. How does the business model and the spending behavior strategically change in that? Dave talked about increasing CapEx, a relatively small amount, maybe $17 billion up to $18 billion this year. But if you're scaling supply is under demand across the board. Is that something that you can handle with just improving yields, or does structurally CapEx need to go up and maybe call into question that you're not going to spend on 14A until you actually get customers' thesis that you've said in the past?
Yeah, good question. So I think in terms of spending, like Dave mentioned earlier, we are over the last year we drive a lot of efficiency, driving a lot of layer of management team, and then now we are really focused on. I spend a lot of time meeting with customer and customer. So we are understanding the workload, understanding the engineering side. How do we drive improvement in terms of the architecture? The execution, in terms of tape out and the design to really drive efficiency there. And then the more important, I think, is talk to the Foundry side. Clearly, we really drive the yield improvement. We see a very nice yield improvement on the 18A. And then the 14A, we already have the 0.5 PDK available. And now we are aiming for the 0.9 PDK. That's where customers are starting to decide which product, how much volume capacity we need to have. And then besides just driving the yield, we're also driving the improvement in the cycle time so that we can really meet the customer demand and timing that they request and then really optimize for them.
Jonathan, can we have the next question, please?
Certainly. And our next question comes from the line of Stacy Rasgon from Bernstein Research. Your question, please.
Hi, guys. Thanks for taking my questions. For the first one, I did want to dig into the segment outlook and I guess the implications for gross margin. So you said data center up, I guess double digits. So that puts it up, I guess 40% year over year, something like that. Assuming PC sequential is or year over year is similar up, maybe low single. I guess I'm just surprised. The gross margins. I understand the inventory benefit in Q1, but it feels to me gross margins are probably flat, excluding that inventory benefit, maybe even down a little bit. I guess I'm just surprised given the magnitude of the server growth, especially given the 18A yields are supposed to be improving. So are they still low enough that the 18A mix is just completely offsetting that? Or I guess any color you can give us in more detail on the gross margin drivers in the near term would be really helpful. I'm just a little confused.
Yeah. Okay. So I obviously don't have your model in front of me, but I'd say gross margins, if I unpack 2Q, we will see some benefit from pricing. We got a little bit of pricing benefit in the first quarter, but I would expect us to see some more meaningful improvement in the second quarter. That's certainly going to help. Mix, I don't know, it's going to plus or minus be in the zip code. Data centers is obviously going to grow faster, I think, but I'm not sure that mix is going to drive much. But 18A is going to be a pretty decent headwind to our gross margins. And if you look at Panther Lake volume increases, it's going to be going up, I don't know, 6 or 7 times in the second quarter relative to the first quarter. And while the gross margins are improving in Panther Lake quarter to quarter, it's still below the corporate average. So when you have that big a shift in the mix with gross margins below the corporate average, it kind of weighs down on the gross margins. But we're roughly in the zip code of what Q1 was like anyway, so I'm not too concerned about it. In the back half of the year, we'll see have some of those dynamics helping us. I'd say the one cautionary concern I have on gross margin in the back half of the year is just some of the materials have gone up in terms of cost. Substrates are going up, T-glass. We got memory going up, as you know. So those things offset some of the improvements that we're having through the year. Longer term, I'm still hyper focused on gross margins, and I think we have elements of the roadmap in the right place in terms of cost structure. Certainly on client, definitely seeing improvement on the Foundry side. We got more work to do on the data center front, but our goal is get the gross margins up clearly.
Stacy, do you have a follow-up question?
I do, thanks. To push on the PC a little bit. So you said industry volumes probably down double digits, so it's going to be even worse, I guess, in the second half, given where you guys are running pretty strong in the first half. I guess, do you expect your full year client revenues to be down consistent with that industry outlook, or is pricing helping you or hurting you? Is share helping you or hurting you?
Yeah,
How do we think about the shape of your client business in the wake of that industry forecast?
Yeah, good question. Well, one thing you got to kind of separate is when we talk about the industry, we're generally talking about consumption, and when we're obviously, that's different than our billings because of the inventory movements at customers. We're not going to be as impacted as the industry TAM because we expect, partly because of pricing a little bit, but also because of inventory replenishment at the customer level. So I think from a modeling perspective, whatever we get to in 2Q is probably what we run the rest of the year roughly. So it's going to be kind of flattish from Q2 onward from a revenue perspective. At least is how we're modeling it.
Jonathan, can we have the next question, please?
Certainly. And our next question comes from the line of Timothy Arcuri from UBS. Your question, please.
Thanks a lot. Lip-Bu, I wanted to ask just about the evolution of your Foundry model. And, of course, you're pursuing typical Foundry customers, but it seems like Terafab is a little bit of a different deal and maybe even like a process licensing agreement. I wouldn't normally ask about one particular customer, but he did talk about it yesterday. So I'm wondering if you can just talk about that. Like, is that going to be a typical Foundry arrangement, or are you sort of, going to possibly turn the keys over on like an entire fab to them? Thanks.
Yeah, Timothy, thanks so much for the question. So I think on the 14A, I think we are making great progress in terms of yield and the cycle time. And clearly we're engaging with multiple customers, heavy engaging. And as usually my style is under promise, over delivering. So we have no plan to announce the customer unless a customer want to announce it, and we are supporting that. So I think back to the Terafab, clearly Elon and I, we believe that global supply chain is not keeping pace with the rapid acceleration in the demand. And so we both share the vision that we're going to learn a lot together, exploring the innovative way, and then in the process of the manufacturing. Saying all this, clearly it's a very broad, the relationship, and then we would update you as we go. Clearly, this is a very exciting customer to work with, and we have multiple other customers we are engaging. Stay tuned. We'll update you when we come.
Tim, do you have a follow-up?
I do, yeah. Dave, is there a way to sort of quantify like how much demand you're sort of missing out on? Like how much are you undershipping the market still in Q2? Is it like as much as 10%? So if you were unconstrained, you could, revenue would be like 10% higher. Is that like a reasonable number?
I probably, not want to put a specific number. Let's just say it starts with a B. It's meaningful.
Jonathan, can we have the next caller, please?
Certainly, and our next question comes from the line of Vivek Arya from Bank of America Securities. Your question, please.
Thanks for taking my question. For the first one, I just wanted to understand the server CPU TAM growth this year. I think, Dave, you mentioned up double digit. I was hoping you could help kind of tighten that. Is it 10, 15, 15, 20? And then how much ASP expansion do you expect this year also, right? And what I'm really curious to understand is the new server TAM growth that you have, how does this compare versus what you thought 6 months ago, just so that we can get a better sense for what does this agentic CPU workload mean in terms of incremental unit and ASP growth?
I think when we're talking about the market, we're generally talking about units. 6 months ago, we certainly expected it. Well, I'd say probably at that point we were thinking it would be up instead of down from a units perspective. Now, obviously, it's going to be up meaningfully. I'll probably leave it to the industry analysts to pinpoint the exact number. ASPs, we have moved, obviously, to offset some of the cost increases we've seen over the last couple of quarters. But it's not the biggest driver, obviously, of our revenue outlook. We think the unit volume is going to be the biggest driver. Now, that's on an ASP per core basis. Obviously, core count is increasing significantly in the data center CPU space, and so we get the lift on as core count increases, we get the lift on the ASPs from that, and that obviously is meaningful.
Vivek, do you have a follow-up question?
Yes, thank you, John. Maybe the follow-up, Lip-Bu, is for you on server CPU competition. So both, when we look at competition versus x86 against AMD, do you think you are gaining share? Do you expect to gain share against them? And then broader, I think the competition against ARM, because NVIDIA is planning to launch a standalone Vera CPU rack. Recently, we heard Amazon talk up their Graviton option. I think Google yesterday said they would launch Axion and connect it with every TPU. So just kind of near term, how do you look at competition versus AMD in x86? And then kind of medium to longer term, how do you see the competition develop against ARM? Thank you.
Yeah, good question, Vivek. I think clearly a couple of things. One, the CPU is a great demand right now. I think we all enjoy that. And then in terms of our product roadmap, we have been fine-tuning the last year. Typical new chip come out, it will take about 12 to 18 months. We are laser focused on execution. Multi-threading, I think we are putting in. So we're going to have a Coral Rapid, have the multi-threading, then we can compete effectively with AMD. And we try to accelerate that Coral Rapid ahead. And then the other part is we're also looking at some of the architecture, CPU and GPU architecture. I've been recruiting some of the top talent to really refine the new product to effectively competing against. In terms of the second question about ARM, clearly we know ARM a lot of respect for them. Renee is a good friend of mine. They have a licensing model. They have been very effective. And of course, they have continued to raise the royalty fee. And then now they also have the silicon team and are building the silicon to compete and then provide the reference. And clearly some of the Amazon, Google, they are using that. That's not news. I sold the Annapurna Lab back to Amazon, so very familiar with that. Good news is I think clearly we have this OEM customer working with us. And then we also have a long-term relationship with some of these important customers. So the roadmap from Granite Rapid to Diamond Rapid, and then now to Coral Rapid is coming up strong. We very like our portfolio. And then on the server side, we also look at beside the 86, and we also have SambaNova partnership so that we do the data flow architecture to really driving that whole together. And we already have some success on that. And then the other part, we also recruit some of the top talent. Kavok used to be running the ARM data center server chips, so he knows very well. And then Srini used to be working with me at Cadence. We optimize for all the ARM products with the customer, so he knows how to optimize all the requirement in terms of tweaking the performance to meet some of the requirement. So I think all in all, I think we have the team, we have the technology roadmap. I think we're going to be over time going to be a very effective competitors to them.
And keep in mind, Vivek, that beyond the product side, we have another bite at the apple, or maybe multiple bites at the apple on the foundry side. We can provide customers with advanced packaging. We can provide customers with wafers. So we have a pretty strong breadth of offerings to customers to help support their CPU needs or AI needs, in the marketplace.
Thanks, Vivek. Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of C.J. Muse from Cantor Fitzgerald. Your question, please.
Yeah, good afternoon. Thank you for taking the question. I guess I was hoping you could walk through how you're planning to drive increased output through the second half of the year. How much of it is yields? How much of it is cycle times? How much incremental wafer fab equipment, as well as outsourcing to TSMC? Would love to kind of get a feel for that, please.
Yeah. Okay. So first and foremost, we are increasing wafer starts in all three of our nodes: Intel 10/7, Intel 3, and 18A. More meaningfully, the EUV nodes, of course, but even Intel 10/7 will be increasing wafer starts this year. So that's a key component of our ability to meet demand. That said, Lip-Bu has pushed the team really hard to provide more supply the old-fashioned way with better yields and better throughput. And I think that's largely how we got it in the first quarter. So, we can expect him to do that through the year. And I think that will be a meaningful contributor to our output. Of course, we use outside foundries as well. And, we flex them as needed as well. We've got, Lip-Bu's got great relationships with the external foundries, and so he's able to leverage that to help us in that area as well. So, it'll be certainly a component of it as we move through the year.
Just to add on to that, TSMC is a very important partner for us. Morris and CC have decades of friendship, and then clearly we know our product group will decide, which is the best foundry. So I think we're going to use a multi-foundry approach, our own internal and also external. And so we really have good relationship, continue to build from both sides to benefit the customer.
CJ, do you have a follow-up? I do. Thanks, John. I guess would love to kind of level set where we are on the advanced packaging front. You talked about rising backlog. Anything you can share in terms of what that number looks like, revenue targets this year or next, the number of customers? Any help there would be great. Thank you so much.
Yeah, I think I've actually said this in the past. We have been really pleased with our traction there. And I think maybe naively, I had thought that these opportunities would come in the hundreds of millions of dollars level. But, so far what we're seeing is that, their demand is more in the billions of dollars per year kind of level. So this is going to be a big part of the foundry revenue as we get through this decade. And the good news is advanced packaging really is a differentiated offering for us, and it does a lot for the customer in terms of allowing them to use larger reticles. So there's real value to the customer. And as a result, we get very attractive pricing relative to some of the other areas of the foundry business. So we'd expect this to be at least, foundry at corporate average or foundry average gross margins over time.
Thanks, CJ. Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of Srini Pajjuri from RBC. Your question, please.
Thank you. My first question on the 18A yields, Dave, you obviously said the yields are better than you expected and looks like, they're improving further. But at the same time, it is still a headwind to your gross margin. So if you could give us some context as to, how much better they are. And also, as you go through the year, when do you expect, that being a headwind to your gross margin? When do you expect that to, at least neutral to gross margins?
I think 18A yields are somewhat a closely guarded proprietary piece of information for us, so we don't typically. I would just say, Lip-Bu had a target as we came into the year for the end of this year, and we're probably going to hit that probably the middle of this year. So, he's done a very good job working the team to drive a better response there. And of course, that carries on to next year's expectations around yield. I think as we get towards the end of the year on a kind of a full pick basis, this is combining the product margins and the foundry margins, will be in a relatively decent place in terms of the gross margins at Panther Lake. We've got more work to do at the foundry level to drive the gross margins to where we want to be. That's going to be multiple quarters before we get those to be foundry average gross margins. But it's tracking better than we expected, which is good. I think we have focused a lot on yields. Lip-Bu's brought in a lot of talent into that space to really focus on it, and we've brought in external partners that are particularly good at including metrology, that's helped us execute better there, and we're starting to see the benefits of that this quarter.
Srini, do you have a follow-up question? Yes, John, thank you. And then on the ASIC business, Dave, I think you said it doubled year-on-year. If you could maybe help us with, what is included in that. I believe it's IPUs, but I just want to get a better sense how big it is. And as you look out to the next few years, what's the strategy for that, business to grow? I mean, are you going after the classic ASICs in terms of XPUs, or is this more some of the adjacencies like what you're doing with IPUs? Any color would be, I think, helpful. Thank you.
Well, thank you, Srini. I think it's a good question. So I think this ASIC business, sometimes I call it the purpose-built silicon optimized for specific workload the customer want. And that's very important. I spend most of my time besides run and now focus on engineering improvement, is spending a lot of time with customer. So it's very important to understand that workload, and then how do we drive the workload, and then to purposely tailor for their requirement. And then clearly it's very important to really have the right strong IP portfolio to be able to do that. And also we have very unique position. We have the CPU, XPU, and then we also have the advanced packaging and also advanced processing, so that we can really optimize for the customer. That I think is a very exciting opportunity. It's a fast-growing area, and then clearly we have something unique to offer, and we're already engaging with a couple of customers. The feedback from the customer is very excited, very positive to work with us, and I think stay tuned on that one. The next 5 years going to be a fast-growing for us.
I think one thing that people have been surprised about is how big the business is already. It's at a run rate that's north of $1 billion already, and I think Lip-Bu and his partner Srini have barely gotten started in terms of what we can make from that. So it's got a really strong base in which to grow meaningfully from.
Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of Joshua Buchalter from TD Cowen. Your question, please.
Hey guys, thanks for taking my question and congrats on the very strong numbers. I actually wanted to follow up on the next question from earlier. You gave some metrics on the near-term CPU TAM, but I think investors are directionally really struggling with how to model the CPU demand for agentic workloads. Any help you can provide us longer term about how we should think about growth, whether in terms of units, cores, gigawatts, CapEx, just anything you can give us? I mean, but bluntly, is the $100 billion number that ARM gave reasonable in your view? Thank you.
Yeah, maybe I'll start and Lip-Bu can pile on here. I think one statistic that we look at is the ratio of CPUs to GPUs. And if you look at training solutions, they're generally running in the kind of 7 to 8 GPUs to 1 CPU. As we look into inference, it's probably getting into like the 3 to 4 to 1 kind of level. And as you get into agentic and multi-agent, it's one potentially even flip in the other direction a little bit. So that's one way to think about it. As you think about the growth rate now going forward, it's going to become a significant part of the AI TAM. Keep in mind also, I would just say, data center obviously is where we're, focusing a lot of our conversation on, but there is going to be AI and particularly CPU opportunities in a lot of different areas. The client space, of course, as I already said, migrating towards AI PC in a more meaningful way. There's edge computing, there's physical AI specifically. All of those, I think, can benefit a lot from CPUs because of the nature of the power consumption relative to the performance. And so, those areas could have even more explosive growth than the data center space.
Yeah, just to add on to it, I think we have to think about the full stack. And so you address some of this agentic AI and later on the physical AI, how the CPU optimize working together with the foundation models, how to optimize that and using the data to really drive the massive opportunity in the agentic AI. I think the inference is going to be a much bigger market, and the physical AI is another big market. So I think with that, that's an opportunity for us. And it's hard to quantify, but I think as you go, we will update you on that.
Josh, you have a quick follow-up? Yeah, sure. Thank you for all the color there. And then, as we think about your capacity tightness, the leading edge foundries are also quite tight as well. Has this driven any near to medium term share gains and longer term? How important is your captive capacity to winning business with customers on a multi-year basis? Thank you.
Obviously, all the supply right now, or the lion's share of the supply, is all internal. But we do expect, obviously, to win customers over time. I think, I don't know, is there anything else you want to add, Lip-Bu? I don't know. Yeah.
Perfect. Jonathan, I think we have time for one more question, please.
Certainly. Then our final question for today comes from the line of Aaron Rakers from Wells Fargo. Your question, please.
Yeah, thanks for taking the question. I want to go down the path of the supply side as well. I think in prior quarters, the suggestion was that you were reallocating maybe some supply of wafers from client to data center. And I think the notion was that maybe 1Q would kind of be the peak degree of constraints. As you rolled up your guidance for this current quarter, I'm curious of how you would frame the level of constraints that you see in the guidance this quarter, and maybe, does the back half improve that dramatically?
Supply will go up in the second quarter. It's going to go up every quarter now going forward. I would say, we certainly were in our lowest point in terms of supply probably in the first quarter relative to the rest of the year. But what we were able to do in the first quarter was go through finished goods inventory and find opportunities to sell product we didn't think we would be able to move. It was either de-spec'd product or it was legacy product we had shelved, and then worked with customers and found opportunities for them to leverage that technology in their system. So that helped out a lot. I'm not sure we have that benefit in the second quarter. So obviously we will scrutinize our finished goods inventory to see if we can find some opportunities. But for the most part, what we're relying on from a volume growth perspective, Q2 versus Q1, is going to be increasing supply.
Aaron, do you have a quick follow-up?
I do. Thank you, John. I guess as a follow-up, I know you talked about kind of the path of the server CPU and the competitive dynamics there. And I can appreciate that you're not given kind of descriptive timing of kind of roadmaps or future generation products, but how do we think about like the progression of your CPU on the server side, Xeon to Diamond Rapids, Coral Rapids, and really kind of closing that gap with simultaneous multi-threading? Just any kind of color on the cadence of the roadmap would be helpful.
Yeah, thank you. I think clearly that the demand is strong, and then we fine-tune the roadmap. I think clearly we highlight the Diamond Rapids, after the Granite Rapids we have. And then Coral Rapids is the next one that we're multi-threading. And then, so I think that is our roadmap. We laser focus on execution. And then meanwhile, we're going to use our ASIC business to really drive some of the customer requirement. We can build some purpose-built silicon in the short term. And then that is a huge opportunity for us. We have all the unique assets that we can really provide. So I think those are kind of roadmap and execution. I think year 2026, I call it the year of execution. So we are improving the execution. Back to Dave mentioned about the yield, productivity, the cycle time, make sure that, supply chain, we can catch up with the demand. With that, I would like to thank everyone again for joining us today. It has been an eventful first year for me at Intel. It is gratifying to see our progress, even as we know we have a lot more to do. I'm looking forward to see many of you at the JP Morgan conference in May and at the Computech in June.
There we go, the Intel earnings. Now, if you only joined us throughout the earnings, you want to go to the beginning of this live stream as we presented to you 10 facts you may have never considered with Intel, which provide great insight to what this business has really been about. And what a great night. Some of our members bought this tonight and up 20% in a few hours, which is absolutely wonderful. Well, what comes next? What comes next indeed? We're always focusing on what comes next. Well, special request from one of you, in fact, Potato Family, asked us to cover this. We are covering this in the morning. The first event tomorrow is SLB Limited earnings. We're talking oil tomorrow morning. You won't want to miss this one. I've already lined up the information for you. 10 amazing facts, information you've never heard before for the stock. Full presentation, full earnings call brought to you in surround sound widescreen with all the information. Join us for that in the morning. It's already posted on the home page of the channel. That's it from me. I want to thank you all for being here. It's now time for me to go over into Discord for my second event of the day. If you are on Discord or you are a YouTube Electrum member, you get all of these extra perks. There is YouTube Electrum if you become a member of the channel. Your very own live streams. There are special events. I do earnings calls for my members, stock analysis for my members, all my trades 24/7, one-on-one support, only me, no AI, no bots, just me. Join me for that. I'll see you back in the morning for SLB. Are we about to hit go through 700 grand to my whole portfolio to $1 million by the end of next year, 2 years ahead of schedule. Pretty incredible when you think we only started with $5,000. That's it from me. Thank you very much indeed. I'm out of here. I'll see you all back in the morning. But right now, 1:15, which is 12 minutes from now, my final Discord event of the day. I will see you there as we get prepared for tomorrow's trades, for tomorrow's investments, and tomorrow's opportunities. That's it from me. Thank you for all being here tonight. We got great likes in the end. 124 people tap the like button. Really do appreciate it. I'll see you over on Discord. If you stay right where you are right now, it'll take you to the extra channel, which will play for you what you've just missed through the earnings. The 10 amazing facts. I'm playing for them for you now. So if you missed it, I'm going to give it to you now. Live now on Extra. Live now on Extra. It's playing right now. The 10 facts. Stay right where you are. It'll take you right there automatically. Everything you need to know, which I guarantee you do not know about Intel. All right, fact checked, presented to you in a way that will make you understand what it's all about. That's it from me. Click on the link or stay where you are. RB, cheers, mate. Defense, thank you. What would you do? What would I do? Well, I own Intel through the S&P 500. I'm not buying it as an individual stock. It's too speculative. It's too like gambling. Yes, I like it, but I've shown you all the things that can go wrong. So I own it within the S&P. I wouldn't buy the stock independently. No, I don't want to wake up and find I'm down 30%. That doesn't work for me. All right, that's it from me. I would recommend anyone tonight take some profit off the table. You made 20% in an hour. That's 2 years on the S&P in an hour, and you don't take it, you don't trim it. What's wrong with you? Anyway, that's up to you. I'll see you on Extra. I'll see you on Discord in 10 minutes. I'll see RB there. He's one of our pro members. Cheers, mate. That's it. Tomorrow's Friday. Party night tomorrow night. A bit of Kid Rock. I love it. Wouldn't be the same, would it? Wouldn't be the same without RB and the Kid Rock. I didn't like the song at first. I love it now. Anyway, Zach Zeit, thank you. You gave us some insights, which I backed up, of course, in our facts tonight about Israel. That's it, guys. Thank you so much indeed. I'm really quite chuffed tonight. We ended up with like 3,000 views. Did really well in the end. Just shows you keep going, you do a good job, you keep providing the best service. You know what? We'll be around when everybody else packs it up. We're going to keep going and we're going to keep winning. That's it. I'll see you on Extra right now for the 10 facts. I'll see you on Discord in just under 10 minutes. Take care of yourselves and each other. SLB in the morning. We're talking oil. Stephen Lewandowski will like that one. Ta-ra.